I welcome us to the call. I can see AA on the call. I welcome you to the call, and we are already done with requirement 1 of the debrief session we started on Tuesday. So we'll be hopefully, good evening. You're welcome. Nice to have you. So hopefully we'll be concluding on that conversation we started on the full November 2019 Detoy Farms and Farms Product Limited question. Okay, so without much ado and wasting of time, let's look at requirement 2 briefly after we looked at requirement 1 on Tuesday. So requirement 2, we are instructed by the examiner to access the contract supply service as contained in Exhibit 10 and 11. And we are to critically evaluate the proposed strategic business opportunity and the installation of meat processing plant by Detoy Farms and Farms Product Limited as contained in Exhibit 12. So principally Exhibit 10, 11, and 12 is where we take our cue from and information from. We are also to discuss broader commercial and ethical considerations as well as the risks that may be associated with accepting or venturing into these business proposals. Okay, so by way of specifics, let's go to requirement 10, 11, and 12 and see what we are instructed to do. Requirement 10. So Exhibit 10 speaks to an email from Tong Adirogba, the shop, to Janet Idemudia, I think a representative of Detoy Farms and Farms Product Limited. Subject speaks to contract supplies. Further to for the meeting we had in my office yesterday, I'm sending you this email to recap our discussions. The shop would like to enter into a supply contract with Detoy Farms on the following terms. Detoy Farms will produce the following for the shop: poultry products, eggs and chicken, fresh veggies, tomatoes, cucumber, and other vegetables, and meat, then cattle and goat. Number 2, the above will be packaged according to specification to be supplied by the shop. Detoy Farms will not put any label on the packages, as the shop will label the packages itself. This is because the shop does not want its customers to know that these products are locally produced. Number 4, the shop will carry out a regular inspection of Detoy Farms and its facilities to ensure that the farm is following international best practices. Number 5, the shop will determine the type of fertilizer to be used in the farm. And number 6, the shop will settle Detoy Farms on a monthly basis. Number 7, Detoy Farms will always evacuate any vegetable and meat unsold at the end of each week from the shop and supply fresh ones. And number 8, the shop is not bothered about pricing, as it believes that it can get its customers to accept given prices. Please let me know your management's reaction to the above terms in good time, as the shop is ready to firm up its contract as soon as possible. Signed, Tong. Then Exhibit 11 speaks to the shop's contract terms. The management of Detoy Farms, after due consideration, have agreed to the terms of the contract, but will follow the following parts. Detoy Farms will add additional 25 markup on its normal markup for all sales to the shop. This will take care of the cost of any vegetable and meat that may not be sold at the end of the week. Detoy Farms will repackage all returned vegetables and meat from the shop and sell them to its regular customers as fresh farm products. Exhibit 12 speaks to the processing plant, or the proposed installation of integrated meat processing plant. The following are the projections for the plant. Project cost speaks to the total cost of the project, that is factory building, plant and equipment. is about 100 million. And there will be 100 million invested in working capital. We have the revenue projection. Estimated revenue 20 million, 25, 30, 35. On the probabilities 25, 20, 30, and 25. Cost of capital 15%. Take note that it is estimated that the plant to have a life of 5 years and then be scrapped with a value of 10 million. Okay, so that's principally the information we need to calculate what we need to write about. So again, the requirement states we are to assess the contract supply as contained in Exhibit 10 and 11, and we are critically to evaluate the proposed strategic business opportunity, the installation of meat processing plant by Detoy Farms, as contained in Exhibit 12. We are to discuss broader commercial and ethical considerations as well as the risks that may be associated with accepting or venturing into these business proposals. Okay, fantastic. So let's look at how to speak to the numbers. Let's look at how to compute the numbers. So having looked at the information contained in Exhibit 10, 11, and 12, now we have some vital information here, and it speaks to the net present value we are to calculate very graphically, net present value. So if you look at the tutorials here on Appendix 4, we're expected to calculate the mean annual revenue based on revenue projected, revenue based, projected, and their probabilities. So we have it here graphically stated that the probabilities have been given to us. So we have the first estimated revenue of 20 million, which we have here as the revenue figure, 20 million, and we multiply it by our probability. And the probability is 25%, which is 0.25, and we have it as our revenue. Because the probability is 1/4, we have to divide that by 20, and we have 5. And we have 25 million, and we have to divide that by the probability, which is 1/5, and we have also 5. Then 30, we have to divide it by 30 million, we have 9. And 35 by 25%, and we have 35 times 25%, which is 8.75. So our total revenue is about 27.75 million. So having done the revenue by probability, we have to calculate the weighted average of, we have to add our initial capital, initial investment, including the working capital. So we have the initial capital here as 100 million, as you can see. We have it as 100 million, and you have the working capital as 10 million. So that will give us a sum of 110 million. And we have the cost of capital stated expressly as 15 million, 15%, I beg your pardon, 15%. Then we have the projected life of the investment, the projected life of the plant, investment in the plant as 5 years. And it will scrap at 10 million after that 5 years. So our simple NPV calculation for 5 years is the cash flow at 27.75. Then we have our discounted factor. At this point, we know how to calculate our discounted factor over 5 years to have 0.695, which most of the time we are always expected to round up to 3 figures. So 0.869 should suffice. So 27.75 times 0.869 will give us 24.13 million. So we do that for the 5 years, and we scrap it also at 10 years. We are selling it, that equipment off as scrap value, the plant, at the same discounted value of the 5th year, the discounted factor. So we have a total present value of 97.9 million. But don't forget, our initial capital and outlay has not been deducted yet. So we have the total present value of inflows minus the initial investment, speaking to that of the outlay and that of the working capital. So our 97.99 million, which is our positive minus our investment, we still did not get any return. We still have a negative 12.01 million. And the result means that the project will reduce value by 12.01 million based on the assumptions. And if we are to decide as accountants or advise, we make from this result and these numbers given to us, advise management that this project may not be viable except there's adjustment of revenue, cost, or any financing terms that will lead to a favorable result. So please take note of that in your computation. Very important. Okay, so in speaking to what we've just calculated, don't forget your calculations will not earn you that much marks. This is just a base. It's your write-up that it's very important. Your writing and interpreting these numbers is key. Please take note of that. Okay, so going back to the actual appendix, that's just a tutorial actually. You don't need to explain that to the examiner. I just did that for learning purpose. So this is the appendix in simple terms. And we can compute that very seamlessly without going through the details in the tutorial. So this is the appendix, which is number 4. So in speaking to the numbers, don't forget our format. Don't forget our format. For each of the requirements you answer, you follow the format the same way it is for requirement 1 and 2. So you don't mix both requirements together. You answer them separately. It's key. So your header first, and you are stating the requirements. I may have stated it almost in full, but you can summarize it. But like I said, in the first class for requirement 1, under no condition should you say requirement 2 as a header or financial data analysis as a header. Don't do that. You'll be marked down if you do that. You'll be marked down. So please take note of that. And don't forget the same 8 boxes apply graphically here for requirement 2. Just the same way the 8 boxes apply to requirement 1, you are to very hastily and speedily do the same for requirement 2. Speaking to the format, whatever headers resonate with you, comes to your mind, please use that header understandably based on the requirements. Requirement 1, we use separate headers, and there were 6, including conclusion and recommendation. So for requirement 2, we are instructed to evaluate the company's proposed strategic business opportunity, which includes the installation of meat processing plant and a discussion of the broader economic, commercial and ethical consideration, as well as risks. So in using data and information from the exhibits, we could say, okay, data information, the header that would suit this is the proposals overview. You want to look at data about the proposal or the project and how you could use it to explain to the board or your client on what the project is about in summary form. So the first point we want to pick, remember we said you're to have 4 minimum for each boxes, which will provide you with superior achievement. Superior achievement. So take note of that. So the first one, we're speaking to data we picked from the exhibit, and we said the proposed supply contract with the shop presents a significant business opportunity for Detoy farms. It would allow Detoy farms to replace the imports with local sourced farm products, including poultry, vegetables, and meat, which aligns with the company's strategic plan. And we said Despite the challenges that may be faced by the project, the contract offers a stable supply agreement with monthly payments, providing potential for steady revenue growth. So your aim is to pick your 1 mark here from this point. So I did about 9 lines. Under exam condition, you may not have the time to write as much as this for just 1 point. So 4 lines should suffice for a point, because you have to be fast. You have to manage your time very judiciously. So most of these points I wrote here are for reading purpose, to help you to read and grasp what you're supposed to do under such conditions, but not to write as much as this detail. Yeah, so as you're reading my thoughts for each point, it may be too much, because under exam condition, you have just 4 hours. You cannot write this much for 1 point. So summarize it, make it half. 3-4 lines should do in explaining the first box on data and information. So the second point I said, Detoy Farms Management's response, speaking to the Exhibit 11. Exhibit 10 was the first request from the shop. Then Exhibit 11 spoke to Detoy Farms' response to the shop, speaking to the markup and the coverage of the risk on unsold products, which is a pragmatic approach to managing potential losses for unsold goods. We said additionally, the absence of branding could limit Detoy Farms' marketing opportunities, but the steady revenue from the contract could offset this concern. So we are generally using data and information, like the examiner said, to pick our mark. So we've given 2 points here under the first header or the first box, data and information. And the third, we said the proposal for the integrated meat processing plant presents a promising opportunity for Detoy Farms to meet growing customer demand for fresh meat and adding value to its existing operations. And we concluded by saying the long-term profitability of this project depends on the successful implementation of cost control measures and efficient production management. Of course, the details in the exhibit speaks to what we are speaking to graphically. And we've picked another point. And for the fourth point, to have superior achievement, we looked at the numbers and we said the projected cost of 100 million for the initial investment alongside that of working capital, which is 10 million, presents a substantial upfront investment for Detoy Farms. And we said the planned success will depend on the realization of higher revenue projections. So careful monitoring and flexibility in operations are crucial to ensure profitability. So we've just generally spoken to 4 superior points to achieve superior achievement. So 4 points under this first box, data and information, has sufficed. So try to number them. If you don't want A, you use numeral. If you don't want numeral, you use something that resonates with you, but just make sure whatever you are writing is not scattered. You don't write sporadically. You stratify your points, delineate them, so the examiner knows that, okay, he's giving this point here, he has stopped, he has continued. So writing just without mixing all the points together will get your script very tardy and unkept. So the examiner will struggle to follow through and read your thoughts. So structuring your answers like this tells him that you are picking your 4 points and you ace this paper very seamlessly. So please follow these nitty-gritties, and you may jumble up all the 4 points in one full sentence, and the examiner does not understand where you started, where you stopped. So please apply structure to your answers. Very important. Some people fail case study not because they don't know it, but because their structure is, or their plan is not in place. That's the challenge. A lot of people know what to write, but they don't know how to structure it or how to write or present their thoughts. So number 2, we look at after data and information, the next one is professional tools. What tools did we use to calculate the numbers? Is NPV. So you need to present under professional tools 4 good points. And a header that came to mind is the proposals analysis, because that tool is used to analyze the numbers to come up with whether it's viable or not. Okay, so the first point we said, one unfavorable clause in the shop contract is the restricting on labeling, which prevents Detoy farms from branding its product. So we said the frequent inspection by the shop could also lead to operational disruptions, as compliance with international best practice may require significant investment in quality control systems. So we picked 1 mark for there in our analysis, looking at the conversation in Exhibit 10 between Detoy Farms and the representative of the shop. And for another point, we now come expressly to the appraisal method we use, which is the professional tool. I'm talking about NPV. So we have several, we have IRR, we have payback period, but we said we used NPV because the initial investment and the outlay and the working capital will help us understand the present value of future cash flows. Remember, the examiner did not say you should use a particular technique, but then from the numbers, you know which one is appropriate. We said NPV will help us understand the present value of future cash flows, while IRR will determine the expected return on investment and the cost of capital of 15% for the project will be viable for the calculation. So we just spoke to the professional tools available and the one we want to use. Then we said the contribution of the shop supply contract on Detoy farms cannot be precisely determined at this time because several factors and key clauses in the contract are not fully defined. Yeah, so the contribution approach may not be viable. We can't use it to calculate the numbers. We're saying without clarity on the critical terms, it's difficult to accurately project the financial impact or assess the long-term revenue potential from the contract using the contribution method. So still on our professional tools, so the fourth point we said, the effect of the shop's contract on the viability of the proposed integrated meat processing plant, if concluded, could be highly positive. Concluded by saying, if the contract falls through, the investment in the plant may be more risky, as there could be insufficient demand to justify the plant's cost. So, speaking to professional tools, we have 4 points. There are a lot to talk about, but then talk about 4 and move on. Pick your 4 marks. Be very mark conscious. The next one is our analysis, our analytical skills that is supposed to be tested here. How are you able to use the professional tools to analyze the numbers and speak to them, communicate to your client? So we're saying that from our headers and subheaders, we could use proposal viability analysis, anything that comes to your mind. But by no means should you use the examiner's headers. Don't do that, you'll be marked down. So for our analytical skills, we said we have analyzing the proposals or the project's viability. We're saying the expected revenue from the integrated plant is calculated as 27.75 million, which we did in the appendix, and we stated all the variables and the probabilities we used to calculate that, and we cross-referenced the appendix. So you see most of the appendix, if you just do the calculations, you have 4 marks for each requirement. But you see, cross-referencing them is what earns you the full marks. And that is why the appendix plus your write-up is what makes up the chunk of the marks for case study. So you can isolate the appendix and pass case study. It has to be cross-referenced with your write-up. So we've done the calculation here. We say see appendix 4. You get your marks very, very simply. Take note of that. I've picked 1 point for just explaining how we came about 27.75 million. Then the second part, we said the present value of the cash flows at a discounted amount will give us this 93 million. And we said it reflects the value of, or the PV of the project over 5 years after doing the year 1 to year 5. We also said plus the scrap value that contributes to the total present value will further indicate the potential worth of the investment after adjusting for time value of money over that 5-year period. And you cross-reference the appendix, which will give you your full marks. Remember, we're testing, or the examiner is testing our analytical skills here. And the third point we could pick, we're speaking to the net present value we've calculated and its result, which is negative. The negativity means that after accounting for all the cash flows, including the initial investment, the working capital, and the operating revenue, after applying the 15% discount rate or hurdle rate, it's still negative, meaning that the project is expected to generate less than the cost. So Detoy farms will earn less than the project, than the cost of investment and financing. And we're suggesting that the project is not, in parentheses, you can see the not in parentheses, is not viable. And we still cross-reference the appendix. So any numbers you spoke to which has been calculated, please cross-reference the appendix. Then the D part, we said, in evaluating the midterms, the constant demand for the products of Detoy farms, the contract could therefore improve the attractiveness of the plant as it would ensure a consistent demand. So there needs to be a provision of more revenue so it could exceed the costs. Or you can say we didn't cross-reference number 4 because we did not add any numbers. And number 5, we said the negative NPV indicates that the project is not viable, and it suggests the investment will not create wealth for Detoy farms, of course, and it's not expected to be beneficial. But we are saying the project can appear viable, and it depends on factors such as the continuation of the contract in the long run and other market economic conditions that could boost the revenue, maybe in the long run, maybe after 5 years or 10 years, it could become positive depending on the returns. So don't go 5. I gave you 5 viable points here under the analytical skills test. But then once you have 4 good ones, please move on. Please feel free to interject like we always say. Don't, if you have any challenge with any of the points, please feel free to interject and ask your questions. All right, so the 4th box, we're looking at issues and options. And in the issues and options box, we're looking at the issues, which could be challenges, and the options is considerations, what we could do, and what we could identify as what to do to ameliorate whatever issue is before us. So the first point under the issues and options, speaking to challenges and consideration, is the clause on unsold veggies and meat in the shop contract. We said this is an issue because Detoy farms needs to evacuate all unsold veggies and meat and replace them with fresh ones is problematic due to the vagueness of this clause. And we concluded by saying the revenue from the contract remains uncertain, and this uncertainty increases the risk of Detoy farms potentially impacting its profitability. So this is a challenge, so we are pointing it out. The second point we could pick here or state here is that the cost of packaging in the shop's contract is also an issue. Detoy farms cannot properly evaluate the shop contract because the cost of packaging, which is specified by the shop, has not been determined. And we're saying Detoy farms is unable to accurately estimate the full cost of fulfilling the contract, making it difficult to assess profitability and financial implications of the agreement. So it's also a challenge. And the third point we said is Detoy farms faces a challenge in evaluating the shop's contract due to the lack of clarity regarding the cost of fertilizer. Of course, and the farm cannot accurately estimate its production cost, which includes direct and indirect, or assess the financial viability of the project because of the lack of clarity on this area. So there are challenges that needs to be clarified. And we said the viability of the processing plant, speaking to the negative present value figure we got, it indicates the project is not viable in its current form and that the cost outweighs the benefit. And we suggest that Detoy farms will not generate sufficient return to justify the investment. Of course, it's a challenge. And the 5th one we said is the potential viability of the shop contract. And we said not actually repeating point 4, but we are saying that a steady, reliable revenue stream from the shop could significantly improve the plant's cash flow and profitability. So it's contingent on the successful contracts execution and a steady demand, maybe above the 5 years, would help the project to be potentially viable and profitable for the Detoy farm. So if you do speak to 4 challenges or 4 considerations, maybe you do 2 challenges, 2 considerations, but if you do 4 challenges or 4 considerations, it's still the same. You can pick your 4 marks as identified in the case. Just make sure you give minimum 4 or much more minimum 3 to achieve competent achievement. Don't go below 3 points for each box, please. Write as much as possible. The case study exam is generally a writing exam. It's not a calculation exam. For all the calculation gurus in the room, this is a disclaimer. Case study exam is a writing exam. Take note of that. All right, so the 5th box is ethical issues. Ethical issues. And ethical issues takes about 15% currently of the marks. Formerly it was 10%, but I think in the current dispensation it's now 15%. And this is very important. Ethical issues has been stressed by the examiner. It must be identified. So if you don't have any ethical issue, you must identify critical issues around the case that could hamper the achievement of the objectives of the company you are studying. So please take note of that. So the first one we identify is the ethics of the shops labeling Detoy Farms product as imported. We said the practice of labeling Detoy Farms product as imported by the shop raises ethical concerns. They are not imported now, so that's like false representation, as it involves misrepresenting the true source of the product. And we concluded by saying such misleading labeling could undermine customer trust and violate ethical standards related to transparency and honesty in marketing. Exactly. So these are things you should point out, read in between the lines, and you know the right, the wrong, compliance matters, ethical issues to talk about. Second point, we said Detoy Farms management decision to repackage unsold products is an ethical issue in the sense that fresh ones are said to be sold, and they are not fresh actually. They are actually practicing lack of transparency, as customers may be unaware that the products they are purchasing are not freshly produced, but instead they have been returned by another client or a vendor and repackaged. So this could potentially mislead customers, affecting their trust if they find out in Detoy Farms' commitment to quality and freshness. So that's another ethical issue. Then the critical issue we could talk about is the reliability of the probabilities and the figures used in calculating the expected revenue. The doubt regarding the reliability of the probabilities used in calculating the expected revenue from the proposed integrated plant, and the lack of concrete data and evidence to support these probabilities makes the revenue projections uncertain and potentially unreliable. Who certified those figures? Who audited them? So that could be a critical matter we'll bring out under the ethical issues section. And we said the risk involved in the shop's contract due to uncertain clauses is a considerable risk. It's a risk that is primarily due to the uncertain clauses embedded in the agreement. And we said these uncertainties introduce significant risk, and Detoy Farms may face unforeseen expenses and challenges that may compromise the profitability of the contract. So this is also a critical issue that could feature under the ethical issue section. We also gave the 5th one. We said the reliability of the data is questionable. The cost estimates, the cash flow, without any concrete detailed market research on the validity of the figures, and it leads to less reliability. So we went more detail on what we said in the D part. So ethical issues also minimum 4, and you move on. And the test of your evaluative skills and judgment, which I call risk assessment. We're looking at positive risk, which is an opportunity, and negative risk, which is a threat. So we're saying the shop presents both opportunities and risks for Detoy Farms. So on the positive side, we said that it offers a long-term supply relationship with a reputable retail chain. Of course, that's positive. But then we also have unclear return policies, which pose significant negative risk, as it may be difficult to actually forecast revenue and manage cost effectively. And that may impact profitability. So we are looking at risk from two perspectives, the good and the bad, positive and the negative. And that's what the examiner is testing, your evaluative judgment, your evaluative skills and judgment. We also said the proposed integrated meat processing plant's viability appears questionable due to its negative NPV. So while the projected revenue is positive, the substantial initial investment and operating costs coupled with uncertainties, we said the revenue projections are too optimistic or the cost higher than expected. It could result in financial losses. And the third point, we said the expected revenue from the project, the risk in the assumptions, the risk of lower than expected performance, factors like market demand, and achieving the project's figures cannot be really uncertain or ascertained. So it's also a risky venture. And for the D part, we said the shop contract supply, if it materializes, could significantly improve the viability of the project, of course. And we said, however, risk associated with uncertain terms of the contract and its potential of inconsistent result remains a concern for the long-term viability. So one has to be futuristic in his approach and presentation to management to be long-term focused, which is key. So you've expressed 4 skills of evaluation of your judgment, and now you need to conclude, which is very important. So after speaking to the 6 boxes, your conclusion and recommendation, it's very, very key. So in concluding, out of the 6 boxes, we'll pick very, very significant points. The first one we said was the uncertain terms in the shop contract. We said clarifying these terms would provide more confidence in the long-term sustainability of the agreement. So that's our first conclusion. Our second conclusion is that the clause and the contracts speaking to the evacuation of unsold vegetables and replacing them with fresh ones is one-sided. Yeah, so the risk of bearing the cost of unsold goods should be shared more equally between the shop and the toy farms. We're concluding on that. And the third point, we said the decision by management of the toy farms to repackage the unsold vegetables and meat from the shop and sell them as fresh to its regular customers is unethical, and we're concluding on that. So they said this practice leads or misleads customers and compromises the integrity of the business, potentially demanding the reputation of Detoy farms and breaching customer trust. We've concluded on that. We're also concluding on the negativity of the project we just calculated, and we said the negativity makes the project financially risky and unlikely to generate positive returns based on that calculation in the foreseeable future. So we've done 4, don't go more than 4, but I gave you 5 here. I said the proposed meat processing plant may become viable if the contract from the shop is concluded and comes on stream. So however, it depends on the successful financial realization of this contract. If maybe the years were increased, there's still some risk, but it could be viable. We are concluding on that. So once you have 4, based on your conclusions, you now make recommendations. And we are saying it is highly recommended, the first point, that management of these soy farms should immediately schedule a meeting with the shop within the next 2 weeks. You see, we are specific. Your recommendation should not be that, okay, since you've concluded that the uncertain terms of the shop contract, particularly regarding the packaging, fertilizer cost, your recommendation should address the conclusions very smartly. Smartly means specific, measurable, attainable, realistic, and time-bound. So we said we are recommending a meeting. We are specific. We are saying in 2 weeks, we are time-bound. To clarify the uncertain terms in the contract, we are being articulate here. considering the cost of fertilizer and all the other issues. And we finally said the formal agreement on these terms should be reached before finalizing the contract to ensure a stable revenue stream. So you see the SMART acronym has been achieved in your recommendation. So please take note of your recommendation. So people will just recommend out of the blues. It's recommended that the shop should change their contract, or Detoy Farms should talk to the shop to adjust the contract. How? You have to be specific. And number two, I recommend, you are being specific now, use words that are personified. You are the one writing the report. Or it is recommended, it is highly recommended, I recommend, it is strongly recommended. Use words like that. First person pronouns to express your points. I recommend that Detoy Farms should initiate a formal negotiation with the shop within the next 10 days. You see, you are just being specific. A revised clause should involve sharing responsibility for unsold goods with the objective of reducing financial strain on Detoy Farms and ensure a fair and sustainable partnership. So use strong words that will resonate with the audience you are speaking to. And we said, based on the current financial projections, number three, proposed integrated meat processing plant, we recommend that the project should not be pursued because of the negative NPV. And Detoy Farms management should halt the project and redirect resources towards evaluating alternative business opportunity that promise a more viable return on investment. And we said these decisions should be made within the next 30 days to prevent unnecessary financial losses. See, we are smart in our presentation. And finally, it said it is highly recommended that the management of Detoy Farms reassess the viability. So we are giving them options now to either not take the project or also reassess again the viability of the project and aim to increase the revenue from meat processing by 20% within the first 6 months of the contract. This could make the project viable. So you are giving them different options. On the contingent on the successful implementation of the contract, a review of the plan's profitability should take place within the next 90 days after the contract is operational. So you see, our recommendations are clear, specific, measurable, attainable, realistic, and time-bound. And after requirement 2, you sign out as the person in the case. You don't do that after requirement 1. So you've addressed the 2 requirements and you sign out. Yours sincerely, who you are, Chukura Ali, Business Advisory Unit. Very, very clear and lucid. All right, so after signing out, you've spoken to the full requirements, which I doubt under exam condition you may have that time because I didn't have the time. So please practice and be as fast as possible. But address requirement 1 first, then if possible, go to the executive summary and pen something down because of time. So your technique, you may not be able to address the 2 requirements fast. So once you do requirement 1, you've addressed the 8 boxes, go to the space you've left for executive summary to pen your executive summary down so that you can be very, very time conscious. It's also a time management technique, and you achieve that by practicing. Very important. Okay, so it's because of the debrief class we addressed the 2 requirements straight for you to understand how to attend to requirement 1 and 2. So having done that, let's go and do our executive summary on requirement 1 and 2. Let's go and pen down our executive summary. So our executive summary, it's very important to understand, it's 20 marks. And a lot of introduction is not necessary in your executive summary or in our executive summary. Very, very succinct. What matters in the executive summary is the points and your conclusion and recommendation. Don't forget your executive summary is 20 marks. So your conclusion recommendation is key for both requirements. So any introduction that will make you take enough space should be avoided. And don't forget, minimum of 1 page and maximum of 2 pages. 3 pages executive summary is highly disrecommended. I recommend I don't recommend 3 pages. The examiner has been clear on it in his study text, 2 pages max. So by way of introduction, we could just say this report is aimed at an analysis of key revenue streams, requirement 1, and an evaluation of the impact of changes in the operating profit. And requirement 2, an assessment of the contract supply, critical proposal, or evaluation of the proposed strategic business opportunity, installation of processing plant by the FFP. Simple. You've introduced requirement 1 and 2 in 4 lines. And what is our method of analysis? We use trend, revenue cost stream, NPV, ratios, any method you use, please state it. And in 1 line or 2, you could do that. And we said all calculations are found in the appendix. We're telling the board, because this executive summary belongs to the board. If you want the calculations, go to the appendix. Simple. Then we'll have reservations saying that the alternative business options are succinctly or sufficiently distinct from the integrated meat processing plant, particularly in terms of market differentiation and financial returns. So these are our reservations. And also, we said DFFP is assumed to be in the growth stage of its life cycle. So this is an assumption. Looking at the numbers, we just assume. Yes, please, ZM, go ahead, share your thought.
Good afternoon, sir.
Yeah, good evening.
Good evening, sir.
Yeah, evening. Nice to have you, ZM.
So thank you, sir. Sir, on this, the method you use in the case study that you mentioned this page, what if you don't use trend analysis? Can you mention it?
No. If you don't,
can you mention
yes.
trend analysis just for more points?
No, if you don't use it, don't mention it. Whatever you use, mention it, please, so that it will align with what you cross-referenced. Yes. So, all right. Thanks for that question. So, having spoken to your assumption, generally, you now speak to the analysis. You could say that an analysis of your revenue cost, and that speaks to requirement 1. So, on no condition should you write requirement 1. Don't do that. People make a lot of that mistake. They will say requirement 1 or financial statement analysis. That's not a header. So state the requirements, even if it's in summary form. Then you state 1 positive finding and a negative finding. So just 2 of them for each requirement. So like the first requirement, we said, despite increased cost in materials, logistics, and personnel, Detoy farms maintained profitability with profit after tax rising to 3.3 million naira. So you see, this is a positive finding. Then we said the business improved its gross profit and retained earnings, though it continued to rely on bank overdraft and has a slight decline in total profits or total assets. This is a bit of negative. So 2 findings as a flash to management will suffice before your conclusion and recommendation. Then your conclusion and recommendation should not be something you disturb yourself on. Just go to your conclusion and recommendation for requirement 1 and summarize everything you've written in 1 line. So if you look at our conclusion and recommendation for requirement 1, you see that everything we said in summary form is that revenue is growing as Detoy Farms Limited capitalizes on expanding business opportunity. Bam! Simple. And we said the second thing, gross margin is stable, reflecting Detoy Farms Limited ability to maintain consistent production costs. Very simple. That's what we concluded in the general note we did in requirement 1. And number 3, we said the overhead rate, which is our cost to revenue, is also stable. And number 4, we said the ROAS is decreasing rapidly. We are concluding on that. So 4, don't forget, 4 is okay. I gave you the 5th one. I said working capital has improved also drastically. So once you give 4 based on your conclusion you wrote about in detail, max 2 lines. Don't make it, because if you write too much here, you're going to go beyond the 2 pages requirement, and too much detail in the executive summary is no longer a summary. You are now writing a full report. So make it as summary as possible. And also the recommendation, we said, manage and reduce the cost of sales to enhance gross margin. So you don't need to be smart here now, because this is a summary. But in the main report you wrote, you could be smart. So we said manage and reduce cost of sales to enhance gross margin. Scale up operations in cattle and poultry segment to drive revenue or growth. Reinvest profits consistently to phase out reliance on bank borrowings. We said closely monitor the growth in receivables to maintain healthy cash flow. So you see requirement 1 has been provided in 1 page. You see how we are maximizing our space, and we're also communicating what we've written in the full detail. And the 5th one, we said the improvement in working capital should be sustained to support operational efficiency and liquidity. I gave you 5, but 4 will suffice, which is superior achievement. In requirement 2, we stated the header clearly. No financial data analysis or requirement 2. We didn't say, just in summary form, an assessment of contract supply service. And you are clear. The examiner knows this is what you mean. Then we speak to 1 negative finding, 1 positive. So for the positive, we said the proposed contract sure presents a significant business opportunity, positive, but it comes with challenges, negative. Meeting the specific specification, packaging requirements could affect brand visibility for Detoy farms. So we also summarize each finding, We also summarize each finding in 1 or 2 lines. And we said the terms of the contract with the shop should be renegotiated, like we said in the full requirement. Number 2, management should reconsider the decision to repackage unsold products to the shop because of the ethical concerns. The plan shows positive or potential for positive revenue. We said, however, a negative NPV suggests that based on the assumptions, it may not sufficiently have returns to justify the initial investment. 4 points, 1 or 2 lines, and we are okay. Our recommendation is that renegotiate the terms of the contract, explore possibility of expunging the clause on evacuation of unsold products. They should not undertake the project because of the negative NPV, and the project should be reevaluated after the contract shop is signed. So you see 4 points, and it's exactly what we've said in detail in what we provided in the appendix. So your executive summary, like I said again, should not be more than 2 pages, max, maximum 2 pages. Okay, so before we go to the introduction page based on our format, let's go to the first page. We've left this page during our practice section. So the cover page, depending on whether the report is internal or external, don't forget, during the pre-scene, you already know whether it's internal or external. So this report is an internal report. And where it's an internal report, the main key of internal reports is that it does not need a disclaimer. But external reports need disclaimers. So for both reports, of course, you must provide the letterheaded of the company, whether internal or external. You must address it to who is the recipient, and you must write the 2 requirements, what the report is about. And you must state who prepared it, which is you. But some people use the business advisory unit or the supervisor of the person. But I prefer to use the person in the case. You are so person, and you are the one preparing the report. Even if you submit it to your supervisor for scrutiny, it will still go to the board. So the destination is very important. So you could use your name here, which I graphically use, and you have the date. Then for external reports, the disclaimer is very important. You want just an information to say this is for the board of directors of this company I'm preparing it for. And no, anybody that uses it cannot sue me or cannot hold me accountable for any decision made on this report. So the cover page is good, and starting your cover page in a good note can give the examiner a good first impression, because that's what he sees first as he opens your script. All right, so this is 9 p.m. Let's go on a short break of 15 minutes, and we'll come back and conclude with the introduction page, and we'll also conclude on the background page and see if we can enter 3 briefly today. Okay, so we'll just go on a 10 minutes break. Let's come back 9:10 and conclude on this. Then we can start chapter 3. All right, so see you guys by 9:10.